encourage young companies to list in India, SEBI has proposed modifying the institutional trading platform. It has also proposed relaxing some key regulatory requirements, such as reducing disclosures regarding the objects of the issue, doing away with minimum promoter holding requirements, applying a lock-in of just 6 months on pre-issue capital, and relaxing the criteria to be used to determine issue price.
These relaxations are really very good. I mean, this is what the promoters would be looking forward to, because most of these young companies, they would be making losses in the beginning. So when they are making losses, what kind of valuation metrics you follow, you used to your DCF or some other method, is very difficult for somebody really. So if you have to give the entire basis of pricing, it's going to be very, very tough for young companies to do that. Secondly is about this no promoter bet, because we do invest sometimes in what is called new age companies as well, and we know that these companies are started by 4 or 5 youngsters coming out of IIT, IIM, and then coming together and asking for investors like us to come in and participate. So investors can have anywhere between 80 to 90% shareholding in these companies, and, and these promoters have 10%, and then you put obligations on them that for 3 years you can 20% of the entire capital is locked in these companies. Just impossible, because they don't have that many shares. So how would you lock in the entire capital? So that is not possible.
So promoter, lock-in, and the objects of the issue and the pricing.
See, what is the object of the issue in such cases mostly? Object of the issue would be to get money to burn, get money to fund losses.
Literally that.
These companies in the next 3 to 5 years
get money to advertise often,
they keep incurring losses for next 3 to 5 years. And how do I write in the object of the, if I had to write in a prospectus,
money to burn would be fun to read in a prospectus.
So I think SEBI is now being a little more practical on these aspects.
Does it go far enough, Manan? Because I know, I'm sure, even though they're relaxing, for instance, the lock-in of shares, the fact that pre-issue capital has to be locked in for 6 months thereafter also creates certain restrictions within itself, right? So have they gone far enough?
So if one were to read the way the discussion paper is, it means that you can't do an offer for sale, which is the existing shareholders cannot sell in this IPO.
So it has to be fresh capital raising.
If that is the intention, we still have to wait to see how the regulations will be worded.
Yeah, sure. This is just a discussion paper.
Right, but that should not be the intent, is what I was thinking. You cannot stop VCs from selling in an IPO. I think the entire purpose of doing an IPO at times is also that VCs can exist or private equities can exist. In addition to that, I think it does confuse me a little bit, because SEBI says main board listings should only be done through an IPO offer document, which SEBI needs to check, approve, and SEBI sets out detailed disclosure standards for it. SME listings, ITP listings do not require a SEBI approval on the offer document. Here, they're saying it's kind of in between.
In the discussion paper, they've suggested that the prospectus would have to come to SEBI.
Now, if the idea is the retail will not participate here, and the threshold of retail here is far higher, so it's not 1 lakh investor, 1 lakh rupee investor, but 10 lakh rupee investor.
You're going as per the ITP parameters.
That's right. So if in ITP or SME you do not require SEBI approval, largely also because SEBI thinks that a very small retail investor is not participating. Here, even a 1 lakh rupee retail investor cannot participate. Then why does SEBI need to provide detailed disclosure standards and plus review them? I think you need to give more flexibility if this is not a main board list.
So in doing away with some old restrictions, SEBI's done a good thing or proposed a good thing. But they've also suggested a bunch of new restrictions, right? So for instance, this platform is supposedly going to be available only for technology and technology-based or related companies, so to speak. So one could very well ask the question, if you were a startup in a consumer space, why can you not avail of something like this?
Absolutely. How do you define technology? Even in a consumer company, if you have a solid back-end IT system and you're making losses.
So is Flipkart a technology company or is Flipkart a consumer company? I'd wonder, how would you define it?
Absolutely. So this definition has to be, so first of all, why do we need to have a definition?
So that's one restriction. Secondly, I understand that they needed to do away with certain promoter requirements, because often, like you said, these companies don't have a promoter, but to insist that there be no promoter. So what happens in the odd case where a founder has managed to hold on to 20, 25, 30% of his company? Would he not have access to a platform of this nature simply because he's been able to hold on to that much? That's another restriction I wanted to bring up. The 5% limit on allocation to QIBs, a single QIB, minimum 500 allottees in an IPO on such a platform, a minimum trading lot of 5 lakh rupees, and all pre-issue capital locked in for 6 months, which Manan has already dealt with. They've done away with some old restrictions but imposed some, or suggested that they should impose some not very reasonable new restrictions.
So on the promoter thing, I have a little different view. I think as far as the promoter thing is concerned, if they are bringing it that below 25%, I think that may be, from my point of view, that is okay, because what will happen otherwise is a lot of families, industrial families, they start new age businesses, and just by going through this platform and even holding 30, 40, 50% as a subsidiary of a large corporate, that would also then get away from this. I mean, today what is this whole idea? Idea is that the new age businesses, new entrepreneur, first time entrepreneur, this is something for them. This is not something for large corporate houses or their subsidiaries to come here.
One of the important points that at least I saw in this is that they assume that you are a promoter if you have more than 25% shares. So if a company is floated by or sponsored by a private equity investor, private equity investors are professionally run, right?
Yeah.
And the chances are they would probably even have professional management for a portfolio company. Why are we presuming that those companies are not professionally managed and hence not covered?
So you're saying if the private equity investor has more than 25%, that kind of company would not be able to avail of this platform, at least based on what they put out in the discussion paper so far.
Right.
So do away with this restriction that this should apply only to tech companies.
Yes.
Do away with this artificial definition of what is professionally managed. Yeah.
That's right.
Do away with the rest of the restrictions as well, the 5% limit on QIBs, the minimum 500 allottees, the trading lot of 5 lakhs, the pre-issue capital lock-in of 6 months.
The way I see it, these are important investor protections.
Okay.
On the back of this, you are able to liberalize many other things. So long as SEBI is comfortable that retail investors will not be participating in the market, then I think they can do away with the first
So
three
you're
things.
not too fussed about these things?
Not so much. That is important protection for the investors.
Okay, fine. One important issue, all of this has to do with pre-issue and during, the IPO. But equally importantly, Manan, post-issue compliance requirements, right? What would these companies, what does the paper suggest will be the compliance threshold for these companies? Do they have to comply with the listing agreement? Does that mean clause 49 applies to them? How are they ever going to meet that?
So that's actually a very important aspect also, because if you see Jobs Act in the US, made sure that your post-listing compliance, at least for a few years, is more reasonable and workable. SME ITP companies don't need to comply with clause 49, the new clause 49.
Right.
The hope is that would also apply to these companies here.
Okay.
It's not very clear so far, but because it's a modified ITP platform, so the presumption is clause 49, the new one should not apply to these companies.
Okay.
Rest of the stuff is pretty all right. Delisting and stuff, we still have to see which of those regulations would eventually apply to these companies or takeover code regulations. But I think the burdensome aspects of clause 49 would not apply to these companies should be a good starting point.
Anything else within ICDR compliance requirements that would need to get relaxed at all to meet the requirements of companies like this?
I think raising of further capital, especially if it is not through private placement. So currently SMEs can list on SME exchange and raise capital only through, ITP companies can only raise through private placement or rights issue.
Yeah.
I think that restriction should not apply to these companies.
Okay, we're at the end of our time in that sense. So I'm just going to put one final question to both of you. And in that, if there's anything else you want to add about what this paper ought to be focusing on, Manan brought up the issue of the depository receipt scheme, which liberalizes how both listed companies in India and unlisted companies in India can access overseas markets, right? Level 1 ADR listings in the US, for instance. This is an effort to bring that, that company back here to India and say, look, we can create an equally attractive platform here in India. On the face of it, does it succeed, or would you say there is a lot more work to be done?
This is definitely a right step, I would say, but there are overall business environment also has to improve. See what happens, for example, in US NASDAQ, when you list, you are not to worry about MAT. It's a stable regime.
You can't bring MAT into this discussion.
No, but an entrepreneur thinks all that. See, if he would rather like to externalize himself, have a company incorporated in a jurisdiction outside India, list it on NASDAQ and get away from all these issues. Somebody is buying and selling shares in India. Now, of course, they have clarified that for FII it is exempt. What about the others who are not FIIs? For them, MAT is applicable in India or not applicable in India, God knows.
Okay, so, SEBI can't fix that. So
no, they can't. But some of these things will evolve.
To the extent of what SEBI can fix,
I think they have done a good job.
They've done a good job.
Yes,
a good starting point, you'd say.
I would say
Manan, you agree?
Good starting point is just that, you of course have the global benchmark, and I think you can do better at times than what they are doing.
Okay.
Just because Jobs Act also requires an offer document should be filed with SEC before you can do an IPO, that should not be the reason why we should have the same regulation in India.
Okay.
So I think we can improve on the system. We can definitely have a regulation which is far better than the discussion paper, but I agree it's a good start.
All right, gentlemen, based on your comments, it does seem that SEBI has gotten off to a good start. Now, the big question is whether we need a separate platform or such relaxations can be made to the existing platforms. Thank you to both of you for joining us this week, and thank you very much for watching. We'll see you next week.
2002 and 2004, and he's appeared in numerous cases of
This week on the firm's website, we host the latest talk from the Vidhi Great Cases series by Senior Supreme Court Advocate Raju Ramachandran, where he talks about his role as amicus curiae in Kasab's case.
Some asked, will you be defending Kasab? When I said yes, they were shocked. The fact that my opponent was Gopal Subramaniam was my greatest advantage. 29th August came the judgment, and you all know what the judgment was. Gopal and I addressed the media together. I said I bow to the verdict of the court. Let us take pride in a judicial system which gives a hearing to the most dreaded accused. I think the Indian judicial system did itself proud. There is no textbook from which an amicus can learn what he should do, what he should not do. It is ultimately the amicus's own perception of what his mandate is.